Hey, my name's John. Welcome to the Guaranteed Retirement Guy Show. Today, we're going to be talking about whether or not you should trade in your old annuity. So I have many people that reach out who want to trade in their old annuities, and sometimes I recommend it and sometimes I don't. So I had someone reach out just 2 days ago and I told them, do not keep what you have. It's good. Or if you do change, then here's what you're going to be charged. Here's your surrender charges. Sometimes it doesn't make sense to do it. Sometimes though it does, because rates are very high right now. And if you have an old annuity that you purchased 5, even 10 years ago, then rates right now are way better than they were back then. And you can absolutely get either more lifetime income, you can get more growth, you can get more fixed growth, more index growth. Just the options are so much better. And it's great. I mean, interest rates are high right now. And because of that, you have a very good payout for income. You have very good fixed rates. And when insurance companies are making more money, when the markets are up, they also give you high participation rates and high caps for growth. So things are very good right now. And if you have old annuity contracts, then it might make sense to book a call. If you're looking to replace those and you're thinking, hey, I'd like to have more contractual guarantees, maybe higher lifetime income or higher growth, then booking a call might help. So there is a link below this video. It goes directly to my calendar and we'll get on a Zoom meeting. Otherwise, you can go to my website, johnstevenson.com, and you'll be able to see my annuity calculators, and you'll be able to kind of go through those and see what the payouts are. And then if you feel comfortable, feel free to book a call with me there as well. So I don't try to sell annuities. I do sell annuities, but I don't try to shove them down your throat. Like there's a lot of guys that will just talk, and they'll try to sell you something. For me, I just like to ask questions and see what you're looking for, give you the education. And then of course, if you're looking to purchase, I'd love to help you. So for me, it's more of a fiduciary responsibility, a fiduciary relationship. It's what's best for the client, which is the way it's always supposed to be. It's almost like, without saying, like you shouldn't have to say that. Everyone should be doing what's best for their client, right? But a lot of times what they'll do is they'll do what's best for themselves, and they'll give their client a so-so product and they'll say it's the best. It's just the reality of the industry that we're in. Unfortunately, there's a lot of people out there that will scam people, and it's important to me. And that's why I always tell people before talking to me, go to my calculator so you can see for yourself. So at least you're coming into the meeting, not feeling like, hey, this guy's going to try to sell me something or try to push something on me. I'm going to explore it with you. We're going to look at the options together, and I'll answer your questions, and then I'll send over whatever you're looking for as far as PDFs. So I'm happy to help you purchase an annuity. That's how I make my money. But again, for the purposes of these videos, I just want to share and educate and show you what is the best option. So we're going to look at the payouts right now, and then you can kind of compare with what you have right now, and then if it makes sense, book a call. All right, so we're looking at someone from Kentucky that got $400,000 in a traditional IRA. If they were to purchase an annuity right now with $400,000, maybe it's coming from an old annuity contract. They're just doing a 1035 exchange. Okay. Then the payout is this, $33,120. Okay. Guaranteed for the rest of their life. That's Talcott Financial. F&G is $31,000. Nationwide is $31,000, and so on. And the way the way they come to these numbers is different for everyone. Some of them give you a base bonus. Some of them don't. What's important is, what is the value of the income? Doesn't matter how they get there. A lot of times people get hung up on bonuses and withdrawal rates, but the most important thing is, what's the highest income? Okay, I don't care how you got there. What is the highest contractual income? Okay. If you want to sit there and wait till 67, maybe you're thinking, hey, I'd like to take Social Security at age 67. Okay. And I'd like to start my annuity payout at age 67. Well, if you do that, then you can see F&G is the highest payout at $37,000 a year. So the way that works, I'll just pull this up here and you can kind of compare. So when you're looking at this, compare it to your current contract and say, all right, well, I know I can get $33,000 right now a year from Talcott. So the easiest way to do it is just call your current annuity provider and just ask them, hey, I want to start lifetime income right now. If I do, what will the payout be? And then they'll just tell you what it is. Okay. Or you'll, on your contract, you'll have a benefit base and you'll have a withdrawal rate, and whatever your benefit base is currently, then you can multiply that by your withdrawal rate, and that'll give you exactly what the income is as well. So, and I can go over it with you as well. A lot of these contracts are hard to read, hard to understand. I look at them all day long. All right. So looking at Safe Income Advantage, this is with F&G. F&G is Fidelity and Guarantee. Okay. It's not the same Fidelity that we know. It's just, they're called Fidelity and Guarantee. Okay, they've been around for over 60 years, a great company to work with. I have a lot of clients with them. But I wanted to kind of show you how this would look. All right, so here's what it looks like. $400,000 going into this. You notice the benefit base reaches $459,000. You might wonder, what is that? Well, that's your pension value. So we'll go down here and I'll show you exactly how we get to that. All right, so coming down here, you'll see 7.2%. That is guaranteed. Okay, and that's for up to 10 years, and that's going to compound your growth. So go up here and say, okay, 7.2% for 2 years, that equals a benefit base of $459,000. Then they're going to multiply that by 8.13, giving me $37,371 per year for the rest of my life. And you can see that that lasts for the rest of your life. And they're saying if you live till 95, you're going to take out almost $1.1 million. If you live longer, you'll take out more. And then they show your balance here, your death benefit will decrease over time and eventually will be gone. Okay, if you die in the early years, you can see the death benefit over here on the right coincides with that balance. You can, you'll leave whatever is left to your beneficiaries. If you decide to cancel the contract, they'll charge you surrender charges, but you can still see there's some cash value during that time. If you want to cancel it and get out, you certainly can. Okay, but again, if you're looking to purchase an annuity, typically you're not looking to cancel it, but sometimes life happens and people do it. So it's nice to be able to have that liquidity. For this column right here, enhanced lifetime withdrawal, this is talking about long-term care. If you are confined to a long-term care facility, you can't do 2 out of the 6 daily living activities, then they will double that income to you. But that's only as long as there is an account balance, because what they're doing is they're liquidating that account. Okay, so that's just, they're giving you the money when you need it the most. And then once that account balance hits 0, then it reverts right back to the $37,371 a year. So that is guaranteed no matter what. The LTC is there if you need it, but it's only in the beginning years of the contract. Okay. All right. So I'm going to go back to this, and really what I would just encourage you to do is use my annuity calculators on my website. It's not going to be as robust as this, but it's going to show you all the raw numbers from the carriers. Okay. I get feeds directly from the carriers, and then you can compare it and you can look and say, all right, well, here's the payout I'm going to have for mine. Here's the payout that they're currently offering with the same money. And if you're in a surrender charge period, okay, then if you're going to replace that annuity, you have to have an annuity with a bonus. Okay. So if we're looking at this, let's say you want to purchase an annuity and you want to replace it. Well, guess what? You have to have a premium bonus if you have surrender charges. If you have like 5% surrender charges, you're going to have to be made whole. I mean, you're putting in 400 grand. So let's say 400,000 is your surrender value, but your accumulation value is 430,000. Okay. Where you're going to lose 30 grand by taking it out. So you need a bonus. In order to actually do a replacement, you have to have a bonus. Otherwise, the insurance company won't take it. So I don't make the rules. That's just how they do it. They're heavily regulated, and they want to make sure that they are not making you lose money by making you, obviously surrender your old contract. Okay. So the contract also has to be 2 years old. That's the other thing to remember. So when you have an old annuity and you want to replace it, it needs to be at least 2 years old. It needs to, if you have surrender charges, you have to do a bonus. You have to have a premium bonus, and it has to be better. Like, it has to be better growth, or it has to be much higher income. Like, it has to make sense. Otherwise, no one should even be recommending it to you. All right. So we're going to go down here and we'll say, all right, where are the ones with a premium bonus? A base bonus, that's different. That's still valuable for creating lifetime income, but you need a premium bonus to actually make your account balance whole. Okay. So we'll say income base. Let's see. Okay, look at this. Income base bonus, 5%, premium bonus, 7%. So this is with National Western. So let's look at that one. All right. So this one, beginning contract value, $428,000. So you're right there. And I'm telling you, it has to be at your current accumulation value. So if your accumulation value is 430 grand, this isn't going to work. You need something a little bit higher. But if it's 427,500, then this is perfect, right? So it's all about what's the surrender value, what's the accumulation, what is the amount that it needs to make up for. Okay. So go down here. So National Western Life is one that gives you a bonus. Let's see, Midland, North American, Aspida. A lot of these give you income-based bonuses. Income base. All right, let's keep going down here. Okay. Now here's one, Athene. So 10% premium bonus. So let's look at that one. So you just have to make sure you you are completely made whole. All right, beginning contract value $440,000. So you're more than made whole, and you've got lifetime income of $34,000. Now, yes, it's not as high as the highest lifetime income out there, but if it's, if your current annuity is providing $20,000 in lifetime income and this is 34, then it makes sense. You're like, all right, yeah, I'll take a loss, and I'll get this 10% bonus, and I'll get another $14,000 in income. Okay. And it'd be a 1035 transfer. So whether it's non-qualified money or whether it's coming from an IRA or Roth IRA, it doesn't matter. It'll just be a 1035 transfer from your old annuity contract to a new one in the same type of bucket, whether it be a non-qualified bucket, a traditional IRA, or a Roth IRA. So that's how that works. So anyways, if this makes sense, or if you got questions, please comment below or ask questions. I'm happy to answer them. If you like the video, like, subscribe, share. And if you are looking to purchase an annuity for yourself and you're looking for someone who is transparent, who's honest, who's willing to show you what's available, regardless of what his commissions are, then reach out. And I would invite you to go to my website first, go to johnstevenson.com, check out what the annuities are paying. And then if you feel comfortable, you can reach out and you can book a Zoom meeting with me right there. Otherwise, there's a link below this video. You can do that as well. So I really do like to be as transparent as possible. And these videos, that's what they're meant to do, is just provide as much information as possible so that you can kind of go out and research a little bit more and kind of decide for yourself what's best. So thank you so much. I appreciate you, and we'll see you next time.